Welcome back. So today we're going to go over Turtle Soup by ICT. As I do believe that the Turtle Soup will help beginners and advanced traders to better understand the market. As one piece of advice is, whenever you expect an expansion to come in, a turtle soup is most likely needed. I shouldn't say always, but most likely. So, what is a turtle soup by ICT? It's a liquidity suite of a structural high or low to then reverse. So, basically, a reversal pattern. I have these screenshots lined up so you don't have to hear much clicking and the video isn't too long. So, moving forward, these are illustrations of the turtle soup. This is a bearish example and a bullish example. As you can see, the structural high being swept to the reverse. So there's two types of turtle soup. There's the reversal and there's the continuation. This continuation can happen after the reversal. They go hand in hand. So here's an example of a reversal turtle soup. Here's a low being rated, price coming back into the range, rejecting the low, and then to then reverse. Here are continuation examples. Price already reversed, but now in a continuation, market is still doing turtle soups to expand price. It's a turtle soup, and then price expands. So to understand turtle soups, you must get down two-stage liquidity. Sorry for those little pauses, I'm just taking a little smoke break. So, two-stage liquidity. Stage one liquidity is a structural high or low, basically the turtle soup. The second stage liquidity is your POI. This can either be an IRL, basically OB, FB, LV, BB, whichever, even the rebirth. On the right, here is an ERL example. Here are two highs being rated, swept, and then to reverse. Either way, these are still two stages of liquidity. So, looking at this example, we can see price came into this order block. So, to expect a turtle soup, the reversal type, expect price to come near the POI, right? You do want to see it accumulate before touching the POI or just making swing lows in this scenario to then be swept, which is your one, and two is the OB being rejected, of course, right? The OB from over here, the bottom of the range, obviously in discount. So price, which is the OB, which is the second stage liquidity, to then reverse. It tests the low of the range and expands. So coming from this reversal, we can see two-stage liquidity being used here also. One being the candle being manipulated. Two is the FAG in this scenario. So you must understand FAGs and LVs. So I know that other people, other traders say that FEGs are liquidity. They are not liquidity. They attract liquidity. They invite liquidity. These are words from ICT's mouth. So when you see an FEG, you can see that price will often attract to the FEG. Not always, but often. So here's an example of price being attracted to an FEG using all the rules we went over. So one being this low over here being swept, and two is the void area, which we will go over in this video. So price does the turtle soup, has its 1 and 2 stage liquidity, then reverses back to the FEG. So this FEG here attracts the price. So this 1 and 2, these 2 stage liquidity right here, is the reason for price being pushed back to then be attracted by the FEG. It must have a reason. The market doesn't just do highs and lows for no reason. So FEGs and LVs, diving in a little deeper now. So you must understand that when you are taking an FEG trade, this is a turtle soup. So you'll see mostly price will come into the FEG and then reject. So price may use a temporal liquidity to then purge the objective. So basically it comes into the FEG, uses the FEG, and continues, right? But here's a little area right here. See this little area? It's called the void. This little area is still left open, basically, because what's happening is price had a sell side offer here. Price came back in to give a buy side offer. However, the left side offer orders appear above the buy side offers are still lingering to then be revisited at a later time. So for coffee. So looking at when the void fills, this FEG test is then being used as the turtle soup. Just as FEG, the third candle of the FEG can be turtle soup, so can the test of the FEG be turtle soup. So you can see the void fills and the OB is used up here for the 1 and 2 stage liquidity to then continue price. So we're going to look at an example. Here we're looking at a range, right? And I've already marked out the premium side and discount side. This low is lower than this low, lower than this low. This high was made after this high was ran. So this is the new low, this is the new high for the current leading range in this scenario. So now we have a premium side and a discount side. So we expect price to come to the discount, obviously, right? Now we know FEGs attract price. As you can see, price was attracted, and then price goes to the objective, which is the DR high up here. So very, very easy to see, right? Just like in normal FEG trade. So looking a bit deeper, here we can see the 2-stage liquidity. 1 being the third candle here, and 2 being the FEG. And I did illustrate the void so I can show you a little bit later in the video what it does. So here, the void was left open, of course. Price ended up doing what it needs to do. Later on in the future, as you can see, it came back down, touched this void. This little void is a little trick or pattern that I've been noticing in the market, and I haven't seen many other traders speak about this. Moving a bit deeper now. In this price action, I have marked out all of the voids present. So we'll go through them to see how the voids are used. So down here, this void was made by this touch of the FEG. to then be swept and used as a turtle soup to hit its objective, which is here. As you can see, this low was maintained to be used at a later date. But for now, price has reversed, right? So now price has made its CISD. There's another void up here, which can be used as support and resistance, basically, as an inverted void. Just as up here, it's a small little tiny void, which is made by this touch of the FEG. As you can see, this void is still being used as the void is used here. There's the turtle soup. It makes a little retracement to its objective to then continue to its terminus of this market maker buy model to then hit this void up here, the premium side, right? Premium side, discount side. So the premium is a little void from this FEG touch. Now there's a turtle soup, and you can see how strong these voids are. After this void in premium was rejected, price just crashes down. As you can see, there's another void here too. It's FEG, touch of FEG, but here's a void left open. So looking forward from this void here is this void here. So this is basically the next few weeks. So this void is used to attract price at the terminus, right? So down here, the discount side appears the premium side. So down here, you can see that this sell side void was expanded through to then be tested and create a small rally. But there's a void up here too, in the premium side. After this expansion, through this void, it touches this void. And this void is in the premium side. So it causes a small retracement down to this FEG, basically. This huge FEG. You must have a keen eye in the markets. So moving forward, here's a bullish void left open by this FEG touch. After this void touch, right? Price rallies, retraces, and then makes a turtle soup in the void, as we would expect. This is a continuation turtle soup. So continues. You see this little void right here was used as a support and resistance, basically. And then on this side, this bullish void was used for a turtle soup. Again, like I said, it's a very strong pattern. To then reach its terminus at the void at the top. Just like the market maker model we saw before. Like I said, these are very, very strong patterns. You're going to see them a lot. So speaking about the voids, as we can see, voids can be used for turtle soups. They can also be used as inversions, and they're used to attract price. So you can see price is attracted by the void. The void uses this low as a turtle soup to continue, and when price comes back, it inverts the void. I think I went through this already. Take that off. So looking at the voids only, we can see how strong they are. Here we see a bullish rally, right? Using just the voids, we can see the turtle soups are very, very nice. Even this one up here. The turtle soup accumulates and then continues, just as you would. So, unveiling CRT. As I see many people have questions about this. It's fairly simple to understand. So, now we know about the two-stage liquidity. Now you know that FEGs are used as draw on liquidities. So when you see the third candle of the FEG have an inside body or accumulates near an OB or IRL or ERL even, this is seen as candle 1. Candle 2 is the one that manipulates and rejects the 1 and 2 stage liquidity to then close within the candle 1 range. As you can see, this illustration, this candle, second candle touches 1 and 2 stage, closes within, as you can expect, 1, 2, and 3. The third candle, as you may know already, is going to be the distribution candle. So A, M, D, 1, 2, 3. So this is a ERL to IRL example. So here's a real example of price of it happening. So you can see there's FEG been left open, right? Price comes to this OB here. So this third candle of the FEG is 1. As you can see, 2 manipulates the low and it closes far within the range, right? Actually almost close to the FEG. It's doing exactly as what we would expect it to do. And you expect the third candle to hit the FEG, but in this scenario, you can see just the FEG and it reverses. But you can see the 2 is a turtle soup of 1, and it continues to the FEG. So this is how you do an ERL to IRL trade. So doing an IRL to ERL trade. So the third candle will always be seen as 1. This is your candle range. So low of 1 is still intact. Basically the opposite of the example showed earlier, right? But this time, price goes to the FEG, uses it to reject, to then attack the low of 1. So this is your 1. 2 will always be the manipulation candle, and 3 will always be the distribution candle. So 1, 2, and 3. I spaced it out like this because I don't want you to thinking that after a 1 candle it's going to be a 2 candle, and after that 2 candle it's going to be a 3 candle. That's not how the market works. It doesn't just do patterns like that. There might be some nice patterns like the one I showed you earlier, but it's not always going to be like this. So, showing an example of the IRL to ERL trade. Here's the FEG. So the third candle is your 1 candle range, right? So 2 is this candle here. As you can see, this candle is an inside body. Did not make a new high, did not make a new low. 2 is the one that manipulates, obviously, right? So it stretches this FEG, creates a turtle soup of the candle 1, and the third candle is the one that distributes to take down the candle 1 range. Alright then y'all, that's everything that I need to go over today. I hope you learned something today, and then hope you have a good one.